Hey everyone, and welcome back. This is video 3 of our 6-part series, The Proven Path to Home Ownership. My name is Austin Cassity. I have the pleasure to work with Tanner Realty Group. And if you haven't watched our 2 previous videos, feel free to go back. There's some great information in there, and then catch up with us here today. Today's topic, step 2 of the home buying process, securing pre-approved financing. In lending, you may hear 2 different terms thrown around, and that's pre-approval and pre-qualification. And there's some important differences between these two. Pre-approval is a formal application with the lender, so submitting income statements and your credit, they'll run your credit. Also, you'll have a formal commitment from a lender to meet the details that they have described to you. Also, it states how much you can borrow and at what rate, and it makes you a stronger buyer in multiple offer situations. A pre-qualification, on the other hand, is not formal, it's not a lengthy process at all, it's not a commitment from your lender, and it's only a rough estimate of how much you can borrow. Being pre-approved means you're ready to buy and puts you in a stronger position when making offers on a home, and pre-qualification is simply a conversation with your lender. So how can you choose a lender? Well, there's a few steps you can do. You can ask for referrals. And I personally have several approved lenders that I can recommend to you. And all of my recommendations specialize in first-time home buyers and will work with you confidentially to review your income, debt, and credit and help you determine how much you can afford. They'll also educate you on the different options for loans, interest rates, and down payment amounts. Then after that, make sure you interview all and choose the one that you feel most comfortable with. Then you prepare a loan application with them, get pre-approved, and then determine what to pay and select a loan option. So before we can get a loan, you have to kind of create a budget in your mind, and you have to create a budget and follow it. To get started, there are many simple budget worksheets online, and you can also ask your lender if they have any budgeting options for you as well. Ask for your credit report from your lender if you don't already have one. Begin to pay down debt. And if need be, make simple changes to your lifestyle, for example, cutting down on eating out or going to the movies as often or purchasing expensive coffee drinks every day. Just by doing this, you'll be able to save a good amount of money pretty quickly. However, do not change your full lifestyle to where then when you get in your house, you're not able to make your payments if you go back to that lifestyle. So identify your expenses, determine the amount you can comfortably afford, and make simple changes so you can get into this house and start building real wealth. So there's 3 big decisions in a mortgage, and that's your down payment. So that's how much you're putting down, your interest payment, at what rate you want to have the interest accruing on your loan amount, and then your term. So how long you want the term of your mortgage to be. The down payment is the first payment you make in the loan process or when you're closing on the home. And this can vary between 3% and 20% of the home price or more if you'd like. The interest rate is the amount you pay to have the loan. And currently interest rates are running around 3%, give or take a little bit. And the term is the length of the time you pay off the mortgage. And the time frame you choose affects both the interest rate and your payment. And generally we'll see a 30-year mortgage or a 15-year mortgage. If you have more questions about that and what it may look like in your certain situation, feel free to reach out to your lender. They should be able to answer that for you. So why do we even talk about this down payment and the interest and the term? Well, that affects your monthly mortgage payment. And the monthly mortgage payment comes from these 4 principles: principal, interest, taxes, and insurance. So in our world, we call that PITI, and it's an acronym for the components that comprise your monthly mortgage payment. The principal pays towards your equity on the home. The interest pays the lender for the loan. Taxes pays the state and local entity for owning a home. And then insurance pays to protect your investment. So this will be your total monthly mortgage payment, this PITI. So now let's go back to the down payment. And you can base your down payment on your pre-approval amount. So your lender will provide you with your pre-approval amount based on your income, expenses, and debt. And based on your loan options, you can choose your down payment. So let's say you choose to put less than 20% down. Generally, the lender is going to require that you pay an additional PMI or private mortgage insurance. This is currently around 0.8%, but paying 20% or more down, you avoid this fee. So let's say you're pre-approved for $200,000. The amount of down payment you make determines the amount of house you can buy. For example, 5% down or 10,500, you can then buy a home for 210,000. But with a 20% down or 48,000 down, you can buy a home for 240,000. So just kind of see what's going to fit best for you. Make a plan and save for your down payment. Consider the time it will realistically take and talk with your lenders about other options as well. These funds come from side jobs, savings, your real job, just saving extra. It can be parents or in-law gifts, anything. Just make sure you're talking with your lender about where these funds are coming from, as that can make a difference. Okay, great. Now you're pre-approved. Well, once you're pre-approved, you're ready to start looking for a home. But it's very, very essential that you don't change your financial status from the time of pre-approval until you close on your new home, because this can affect your loan approval, and you don't want to get to the end of the process and not be able to get into the home you loved because of this change. This means no big purchases like cars, furniture, etc. No big credit or debits added, and no job changes in this process. So protect your down payment, get all of this in line, get your pre-approval, and then we can start house hunting for you. Well, that's all I have for today. Next week, we will be moving on to finding your home. This is the fun stuff. Getting out into the community, finding where you want your home to be and what you're looking for specifically in your home. And we'll go over that next time. Thanks again for joining us. Hope you have a great day. Bye-bye.